FOMO and fear, the two emotions that are surefire bets to make you lose in markets, are starting to happen again right now and right here. So where are the best areas to be in as we approach one of the biggest earnings results we've ever seen in markets? Well, it seems like the Russell 2000 is starting to improve. The S&P 500 is just before all-time highs as the Dow actually creeps out to a new all-time high. And the NASDAQ is nowhere to be seen. Why is this? Well, it all comes back to the most important stock in the world. Yes, we're only a few days away from Nvidia earnings season, but let's take a look at the macro, the data, and of course, stocks, commodities, and cryptos moving forward. It's going to be a great one. Join us. Well, welcome back everyone to The Daily Show. My name is Tom, and you may notice a sea of red, particularly in semiconductors over the last 24 hours. Yes, it seems like some people are getting concerned about growth, and it also looks like there could be some rotation, according to some file notes we're starting to see show up on X, about big funds getting out of mega caps for the first time. Now, why might they be doing that? Well, it comes back to small caps gaining the most when it comes to Fed rate cuts. Take a look at this chart and you'll notice that small caps 3 months, 6 months, and 12 months later have the best returns, and mid caps actually aren't too far behind. Now, this may sound familiar because, of course, we've been talking about the 493 stocks in the S&P in particular being something that the market is already looking towards in 2025. And remember, into 26 at the moment, they are still quite bullish. Earnings estimates are being upgraded across the board right now in markets, especially when it comes to the smallest caps. And you'll notice here, companies or basically banks like Fannie Mae are basically coming out and showing Goldilocks style scenarios. Scenarios where the Federal Reserve achieves the soft landing that we know they're trying to right now, and that unemployment rates steady off between 4.5 and 4.6%. Now, we know it never works out this way, but that doesn't matter because the market is forward-looking. And if they believe it's going to happen for at least now, that's where the flows go. And you'll notice that since we had that crash only 3 weeks ago, which seems like eons now, doesn't it? And let me know in the chat how long it feels like. And 493 stocks have been doing actually a lot better than the Magnificent Seven when it comes to recovery. Of course, we saw that initial recovery in Nvidia, which was absolutely ballistic, which we expected here on the channel. But now we're starting to see that rotation. And we've talked about this through our weekend video, through last week, how we had different asset classes starting to show a really great level to be getting into them. New York Stock Exchange daily volume ratio last week was actually so good that we had a 9-to-1 up volume session on Friday. And of course, on the same day, based on Jackson Hole, we saw 14-to-1 up day volume in advancing stocks in especially the small caps. So it was a very strong day across the board. And it brings us to this very interesting article here shared by Seth Golden over on X. And basically you can see here that it looks like big hedge funds, according to Goldman Sachs, are starting to reduce their mega caps. It said here both hedge funds and mutual funds trimmed exposure to mega cap tech by the start of third quarter. A shift was rewarded as these stocks faltered during the summer. No surprises. We already thought that semis were starting to weaken at that point. Then it says, in contrast with mutual funds, hedge funds reduced exposure to cyclicals during the second quarter, which also added to performance during the recent volatility. And it looks like both hedge funds and mutual funds found opportunities within small caps. 51% of small cap core funds are outperforming their benchmark this year. So this is a very interesting and big, profound change when it comes to what these particular biggest players are doing. I also thought it was very interesting to see both hedge funds and mutual funds adding positions to healthcare. Now, we've seen this in our private community. We've talked about this only literally a few weeks ago. We started to see healthcare, the actual sector, really break out and show some significant strength. Now, of course, it is a defensive sector, but this is a well-known one as well, post-rate cuts, that tends to do okay. So basically, these guys, they're moving, they're rotating, they're making these moves, and we're starting to see it show up in the price action. Now, will that be the right move? Well, I can see why they're kind of doing it. And one of the big reasons, I believe, is because this buyback season may be the big last one for the mega caps. And you can see here, when it comes to total assets under control, they're moving down into only amounts of cash at about 8.8%, which is quite low across the board. And we also are starting to see a big strength across the world. You can see here, based on the Grant Hawkridge chart, developed markets are improving, but also emerging markets for the first time are starting to show improvement when you're looking at the last 10 days, when you're looking at the last 20 days since the flash crash. So things are starting to actually flow and move around. You can also notice that people are really feeling these kind of big gains, big concepts when it comes to their 12-month targets. A look at the bullish backdrop of what happened in 2023, again, this is an interesting chart shared from Bank of America, shows you that the S&P 500, they were predicting by November 2025 would hit 6150. Now, of course, we're not quite there at this stage, but I actually think it could be even higher if the markets do exactly what they're planning on doing right now, which is, of course, to move into the other mid caps, small caps, and start to bolster the market that way. Ultimately, though, it's going to come down to that one stock, and that's going to be Nvidia, and also everybody believing that the Federal Reserve has managed to perform the miracle. That is the soft landing. Now, here on the channel, we've talked about this a fair bit when it comes to live shows. We don't believe they will end up with a soft landing, but it's probably going to look like a soft landing, at least initially. And we do know that the market is implying that there are some significant rate cuts coming, and I think somewhere in the truth is going to be in the middle between these two. I don't think. So it brings us to the question then of, do we have enough signs flashing red? Well, while this is only one way of looking at markets, whether you say, okay, yes, there's enough bear signs or not, you can see that some of the things that Bank of America, Goldman Sachs, JP Morgan at least put out there aren't flashing quite in the 70% bracket that you would usually see in prior peaks. I can tell you that some of the indicators that I use are not flashing in the same way that I would usually expect around this particular late cycle, the great late cycle that we usually look for in markets. And these aren't just, late cycles like a normal 7 years. This is actually a very significant one that's going to be happening over the next 2 years. So make sure to subscribe as we delve further into that concept. Let's talk about card debt balances. Now, we're seeing here delinquencies going up over 90 days. They are at a pretty high rate, 10.9. We can also note that this is as high as we were in basically when we were already in a recession in the global financial crisis. And this has people very concerned, and rightfully so. But I would say that credit card delinquencies are not the biggest issue. Like, if you were going to say, is something like the commercial real estate, which is a much larger number, probably a bit scarier? Yes, it technically is. But again, they are well known at this point by the market, and the market is currently shrugging those ones off. If we were in some kind of real estate monster crash, then we would at least see some weakness in things like home builders. And at this stage, we're just not quite seeing that. Maybe it's going to be post-election. We'll have to find out. Let's talk data and stats, because we know that, of course, Nvidia is going to rule really what happens here over the next coming days. If Nvidia doesn't get it done and get a good number, and I tend to believe it will get it done just because, remember the 100 trillion number of CEOs that were at one of their meetings this year. But overall, we do have some weird weakness that could be coming through, specifically back of September. Now, that's when we get the buyback period shutting off, which is this is the strongest buyback period of the year usually. And that is also post rate cut, which tends to show a little bit of weakness for about a 1 to 3 week kind of point. You can see here Wayne Welly's data also suggesting that when we've had strong years so far with weak August, especially the start of August, then we usually get that September 23rd to October 2nd weakness. So again, kind of like statting up and agreeing with those concepts. We know there's a recession path. We know there's a non-recession path for the next 12 months. That doesn't mean no recession, but no recession for the next 12 months. And in these markets, we're going to be looking at how many cuts does the Fed do, how fast, and more importantly, how large is the size. A 50 basis point cut, remember, we are not expecting that, but if it does happen, you'd certainly want to be quite freaked out. Now, when it comes to gold, we've been talking a lot about $3,000 an ounce, possibly even the upward opportunity of $4,000 an ounce. If it's currently trading the correct trajectory, that could be as early as mid-2025, an interesting chart there. And we're also noticing that gold is starting to outperform the S&P 500. Now, this is a very interesting phenomenon that happens usually during significant gold bull runs. So we're watching it very closely. Of course, I already have believed this for a while. And it all makes sense to, of course, late cycle investing. When we move over to Nvidia, I believe the options market has come down a little bit since posting plus minus 12 on the weekend. But basically, we are now at the point here where we're about plus minus 10. So still looking at $300 billion of movement potential. And on top of all of this heading into Nvidia's earnings, we still have these random dark pool activity trades, specifically in the Qs, which is here an ultra short. We've also got them in the S&P. Now, there are some people clearly that were betting against Jackson Hole, you'd have to think, and they're still betting against Nvidia. Now, will they be correct? I don't know, but we are certainly looking for gap fill potential. So let's talk about flows through the different sectors. It was a great day for energy. It was a great day for defensives, staples, utilities. We still had financials up there, which is a good sign for the overall market. And it was bad for semis and tech as risk came off and markets started to move towards what they've already been doing, which is basically saying, you know what, we're kind of done with the semis for now. We just pushed them up 30% in literally 2 weeks. Now we're going to go through and we're going to start buying into other sectors in the markets. And you can see based on that Goldman Sachs report that this is actually what some of the fund managers have been doing and continue to do. They're targeting that 493. They're targeting the US 2K. And in some ways, Tom Lee is more than likely correct from that aspect based on at least previous stats, which we've spoken about several times on the channel before. Let's jump on over to the S&P. We had advanced decline line going up, even though the market was sitting around doing nothing. Again, that's showing you that underneath the hood is actually doing pretty okay. And when we go over to the futures market, you'll see it's up, down, and all around. Now, we do have on our indicator here a bit of a stop sign. And of course, that makes us say, you know what, is this the best place for us to be buying the S&P? Probably not. We want to be patient. We want to react. We don't want to predict in this case. Why? Because if it changes to the high, and we did this as a test on our Monday stream, then it becomes quite bullish. But if it ends up going lower, then we've got those gap fill zones. And do remember, when it comes to the gap fill zones, they are basically sitting here, 5,455 and 5,351. So pullbacks to these areas would be more than fine after the Nvidia result. Let's say it doesn't absolutely smash what Wall Street wants. Let's take a look at the options flow, and it's up, down, all around. There are actually a lot of puts coming through now. There are a lot of calls coming through. You can see the positive gamma that would flow through if we got a 56.30 plus close. It seems on the next session. We're trading at 56.17 at the time of this recording, and you'll notice that it's clearly confused, and it continues to be confused with puts stacking coming into the Nvidia earnings. And what a lot of people are doing is they're trying to use SPY future or SPY options to hedge Nvidia and basically NASDAQ options, because Nvidia is too expensive to hedge itself. You can kind of see that starting to appear here in the overall structure, and it makes it a little bit difficult because, of course, what you want to be doing now is looking at price action. If we close to the new low underneath, let's say Friday's low, or I think it was Thursday's low last week, then we're probably going to go get a gap fill, maybe even 2 gap fills, because it'll start feeding into negative gamma, as you can see here across the board. But if we get a great Nvidia result, things are going to go ballistic in the positive side. Let's look at CTAs. CTAs still basically neutral up on NASDAQ and S&P. Gold CTAs disconnected completely with price right now, which is something we do need to be continuing to watch. Silver also seeing the same thing. But Brent, we have had a very nice uptick in CTAs. And of course, price action has come along with it. Let's take a look at Nvidia. What's at stake? Well, it's the 130 strike. We know this. We've talked about it last week. It held the market back. It's still coiling just underneath that level. So it's kind of around that zone. If it breaks out all-time highs for Nvidia, you would have to think so. So what is your best guess? Is Nvidia going to beat expectations and go higher, or is it going to fail? I think we need to do a poll on this. Let me know in the comments, though, your opinion with maybe a little bit of description why. It would be interesting. 225 for Tesla is the call wall. 210 remains kind of the put area, and the market remains completely trapped within these two zones. Let's now jump on over to the charts. We've got yield and inversion. No changes really there over the last 24 hours. Treasuries still stuck within the same area. Dollar index still falling, so still on the downward trend. We're looking towards this now potentially to go to parity, which is 100. We're trading at the time of this recording at around 177. So it still looks like a fairly weak dollar. Again, I think it's going to be a post-Nvidia move, even though you wouldn't think that will move the dollar. I'm pretty sure a lot of movement's going to happen off that news event. And then we've got copper struggling with this peak, trying to break out. You can see here. And obviously, we've been bullish on that since around 4.05. So metal certainly improving across the board. Gold still doing quite strongly here on the weekly. You'll notice on the daily as well, it's holding up okay. And for now anyway, we have to like gold and silver, and we continue to like silver a little bit more than gold when it comes to just the ratios. The ratios for silver is much cheaper than gold at this current point. Now, we knew that on our weekend video that break above 74.34 was very bullish. It opened exactly the same price and then rallied like an absolute beast through the session. Now, I would expect that there are really, I mean, you'd have to say, yes, okay, the bulls are in a bit of control right now, but 78 is going to remain anywhere in here is that supply area. So it's going to remain a bit resistancy. I could see the market doing something like this. At this stage, it's, of course, an election-based trade. You've got to be a bit careful on oil because there are powerful forces at work. But at the same time, once you got that close, it's leading in, and you've got to think that this market could go to 78. It pullbacks at the moment. You'd have to think also to be bet by bull demand as long as it holds that bottoming zone for the barrels. What about Tesla? More inside based on this candle here, and it is a very difficult overall trade. Again, it looks like a lot of the market, especially the big caps, they're being sold off into retail traders, that's us, ahead, or at least something's going on ahead of this big news event. And remember, it's that patience, react, don't predict. Look at semis. Semis all sitting. They get into these gap fill areas. They hit the resistance. Nvidia is the exact same thing. Stop sign again. We're just kind of waiting. We're just waiting for the next big move. We had a very big confidence that Nvidia was the place to be 3 weeks ago. It was. It went ballistic. It went up 40%. That's insane, really, when you think about the timing. And now we're kind of just sitting there waiting for the next big announcement. Now, there are some other things that are going on in the world that are pretty big, and that comes to the Chinese market. Now, a lot of you were mentioning, oh my goodness, PDD, absolute abomination, and it was. We'll look at that in a moment. But HSI actually held pretty well. Remember, the analysis we're doing in general is based on HSI and in particular 700, which is Tencent. It's very important that you don't look at any particular stock, I think, in China too much, because when you do that, there's probably going to be some big winners, some big losers. And PDD was actually one of the most positive stocks out there when it comes to that owns Temu. So it was one of the best stocks out there in the markets, and it got crushed. And we're talking crushed. But you can notice that HSI, of course, doesn't move too much based on that. And it's still in that upward trend that we spoke about the other day. So things, again, you got to compare the right markets, not the wrong ones. Let's have a look at PDD. 100 is where we're at, and that is down at 28.51%. So a disappointing miss here. Interesting price. A lot of people are going to like this point because, of course, it's the round number 100. But on top of that, a lot of people are loving the price action on this stock, and it's been actually quite strong since 22. So a surprise shock result, and this is not a small company, so interesting to see how this recovers, if it does, over the next couple of weeks and where flow ends up being. For now, HSI, really nothing changes from what we've talked about in the previous videos. Let's move over to the US 30. Again, no good news out of China. It's all bad, but you're starting to look at that structure of HSI. It's the price action structure. It's got nothing else to do with the data or anything. You have to ignore that when you're coming to bottomings after recessions. Now let's move over to the US 30, and you'll notice that the Dow did pretty well. It's still kind of floating around this high. We've got a star, which basically means that you could be really at the peak now for the Dow, at least short term. And you'll notice it doesn't happen that often. So yeah, sometimes it's wrong, but often it is a turning point. So we've got to be a little bit careful here. Again, I think it's all going to come back to Nvidia, even though it's the Dow. So we're just going to need to wait for this sentiment a little bit. Now, where the market has been flowing nicely has been the Russell 2000. And we didn't quite get to our 2250 zone. We ended up hitting 2242. But as you guys would know, I like to take it just before what I expect as a round number. And this is another one where I don't think it really matters if you're chilling and the market does this and then it breaches out, because we know the next level is 2430. And if it gets through there, then it could go absolutely ballistic. So you've got to put things in perspective. Right now, right here, is this the greatest point to enter in the Russell 2000? Probably not, unless you've got a medium to longer term time horizon. But as a trader, there's no doubt going to be an opportunity soon. So stay tuned and we'll keep talking about it. Let's move over to the Qs. Again, looking for gap fills. We'd like to see 463 or 451. Both levels would be pretty cool to see. Let's move over to crypto now, and you'll notice that Bitcoin fell a little bit, but it's starting to recover. Again, anything around 61, anything in these two blue lines is possible to pull back to and still find bulls. And I think, yeah, it looks pretty strong. Bitcoin market looking great. We've liked that since last week. It's been making a series of higher highs and higher lows. I love that type of thing. And Ethereum also had a little breakout as well. So I'd like to see some bullish action on this over the next coming 24 hours, just to really show that this market has some legs in it. But so far, so good. And we're hoping that Bitcoin can regain past 65, move to 68. And of course, if Bitcoin can get through 68, then there's a good chance that we're going to an all-time high. Exciting times for the cryptoverse. Let's have a look when it comes to the news this week. The main big things, prelim GDP, that shouldn't move the market too much, although you might think it's new. Algorithms will have already got that. And core PCE at 8:30 a.m. on Friday, which is one of the key numbers that the Federal Reserve use. If you're interested in staying up to date on some of the other things that we're doing, make sure to follow us on our social medias, including X. We do post quite a lot over there. And I want to just say there will be a special, hopefully, for Nvidia post earnings. We'll see what we can do about getting that one out and talking about everything to do with it. Because, of course, this week, that's really what matters. Subscribe, smash the like button. Bye for now, guys.